evening, ladies and gentlemen, and welcome to Leaders of Tomorrow, ET Now's one-stop platform for the micro, small and medium enterprise sector in India. Tonight, we are here for another exciting conversation on MSME dialogues. India is the fastest growing and the third largest startup ecosystem in the world. Many of us often think of business ideas, but how does one really draw up a sound business plan? What are the key areas of business that need investment? How does one raise funding, and what are venture capitalists evaluating when they look at your business plan? To answer all of these questions and many more, I'm joined by a very eminent panel today. Please welcome Amrish Gupta, CEO and founder, Knowlarity, Sunil K. Goyal, founder and CEO of Your Nest, and Shailesh Vickram Singh, ED of SeedFund. And joining us from Gurgaon is Amit Jain, founder of Car Dekho. Welcome, gentlemen. It's a pleasure to have you on Leaders of Tomorrow. And if I may say so, you are all playing an important role in making India a very fast-growing startup ecosystem. So maybe I'd like to throw the discussion open with you, Amrish. You're someone who started out in 2003, if I'm not wrong. You went through a couple of failures before you really launched a successful enterprise. How does one know that the idea is really scalable in the face of failure?
Well, it's difficult. When things are not going well, you doubt everything, including the initial idea as well. And when I started in 2003 with the idea of doing apartment search on internet, which was actually the idea was quite a good idea, I gave myself 1 year time period,
Right.
and I tried a lot of things during that time period. I was trying to see whether the customers are looking at and taking up this product or not. And in 1 year, I was not able to get the kind of traction that I considered success for myself, was not able to raise investment. Things were not going well.
And then you came up with Knowlarity a couple of years down the line. What convinced you that this time it's going to make it?
I think the experience first time. Once you're an entrepreneur, once you start working on your idea where literally the sky is the limit. You can dream of anything and start executing on it on the next day. I think that experience doesn't go away, and I think that is what made me come back again in 2009 and give it another try. And that's how Knowlarity got born.
Okay. And Amit, you tried different businesses as well and failed at them. And then 8 years ago, you launched Car Dekho, which was a bootstrapped business for a number of years. Today, of course, you are backed by none other than Ratan Tata himself. What made you sure that this one is a great business idea?
Look, I think as a startup founder, I can tell you that you have to fail very fast and you have to fail so many times to learn fast. What I basically realized was in the kind of businesses I was trying to pursue, the customer acquisition is the key piece. And if you can't crack it, you won't be able to basically survive, or you'll have to keep on spending marketing money. And luckily we did not have marketing money, so it all lied in innovation of how to acquire consumers free of cost. I learned how to fail fast, frankly. That was the biggest learning I had, so that I could time box the investment I was making onto a project. In any case, I had limited funds at that point. The idea was to basically start getting revenues on each businesses for us because we were not funded. And that was a key part. Or if you can't make money on it, you won't be able to basically pursue it further, frankly, beyond a certain point of time. So our key focus obviously was how will this idea monetize? And for monetization in internet businesses like ours, you do need consumers to come to you. So what made us successful was the very fact that for every single startup I did, I was very, very keen on micro measurement. On every week I would make some changes. Actually, it was every day that we would make changes. Until today, Car Dekho changes every week. What I realized was that agility is the key, and how you break the project, how you break the feature into multiple small steps, so that you can actually have an initial flavor of whether it will even succeed or not. That's very key to the new startup guys.
But let me pull in Sunil at this point into the discussion. From an investor's perspective, there are today in India 2 or 3 startups are taking birth every day as we speak. So from an investor's perspective, what are the key sectors that you think will drive growth over the next decade? Ideas that will surely find takers.
Always, any branded business which is going to be consumer branded business that was fundable 5 decades ago will be fundable 5 decades later as well. Last 5 to 10 years, it was all about consumer internet, anything on mobile, smartphones, etc. That was what we were looking at.
Right.
Recently, the trend has started towards software product companies, software as a service, platform as a service. So India is now bringing those products out there. So 2016-17, we'll see a lot of those investments coming by.
Right.
On longer term horizon, I'm looking at digital identity, digital payments, Internet of Things. There is going to be hardware design and some defense make in India kind of things that will be funded by some of VCs like us. Even when I'm technology fund, I'm looking at pure technologies coming by. So those are the ideas that are going to be coming by.
Okay. So Shailesh, we've talked a lot about the idea, but let's talk a little bit about the scalability as well. What are some of those foolproof parameters that an aspiring entrepreneur should be looking at to ensure that he or she has an idea that is really is scalable and there is a good go-to-market strategy around it?
Scalability is very, very important, but it's not so obvious also. Like what we see generally, the ideas which look generally very mediocre initially tend to become very, very large. So whenever you look at a business idea, the idea is to understand how large the market is and what are the potential impact can be, rather than doing very what you call Chinese mathematics kind of analysis. So we have like Redbus, which really impacted, right? At the time of Redbus acquisition, they were selling close to 40,000 odd tickets a day. But when they came to us, I think they were selling 1 ticket a month. Right. So the idea, even when they sold that large, they become that large, they were still 3% of the serviceable market, right? So the idea is how big the opportunity can be. So I don't think there's any foolproof idea. A team always discover as they grow.
And Amrish, when you established Knowlarity, you clearly saw a need gap. Is that the single biggest factor that can assure success for an idea? Or, there are a lot of ideas that are Me Too's and that are also successful simply because India is a consumption story today. So, in your opinion, what works better?
I think the multiple things. Of course, there has to be a need. And for us in Knowlarity, we literally started the industry of enterprise telephony in India, making assumption that if the consumers have cell phone, they are going to call business and business would need some kind of enterprise telephony to be able to handle these phone calls that they'll start receiving very, very soon. So there was a clear need, but you also have to see whether there is the environment available to be able to execute and build a profitable business on top of it, which is you have to make sure that there is a large market available, right? A large immediate market available that the company can go after. You have to make sure that there is this market is accessible to you. There's a go-to market available. For example, e-commerce could have happened 10 years back as well. But because of smartphone and internet, it is happening now versus 10 years back. But fundamentally speaking, you have to make sure there's a large enough market available to you, and there's a way to access that market and deliver product to them profitably. And I think that happens, I think it's a good recipe.
Okay, so Sunil, one has an idea, one identifies a need gap, but a lot of these startups have never really been to B schools or written a business plan in their lives. So Mr. Investor, please tell us what are the essentials of writing a good business plan?
I think if I have to put it in one sentence, it has to be the deep customer insight. Any idea, anything that comes to us on our table, the market could be large, the supply side can be fixed. It is about winning a customer faster than anybody else. If somebody can demonstrate that, they know they have caught the nerve of the customer and they have reduced the cost of acquiring the customer and time to acquire the customer. That can be captured in a thought, in few sentences. It could be demonstrated then in a small, back of the envelope calculation, or not more than one Excel sheet, that somewhere down the line, this particular idea is going to be viable for me to build a sustainable business.
So after an idea and a business plan, next up there is funding. And Amit, you bootstrapped your business for a number of years before actually going in for VC funding. How tough was the negotiation, and at how much should a startup really agree for dilution?
Look, I believe most of the founders in the country dilute too early. And that's the reason why most of the founders in the country actually end up in a single digit. Most of the people are actually starting up in the country today to basically raise funds. And that's a wrong way to approach the whole situation. A lot of people, in fact, when I was young, I used to also think, there's glory in, picking up funds. I have now realized that it was such a wise move not to pick up funds early, and my brother obviously advised a lot. He's a co-founder of the company, and we basically decided not to pick up funds despite getting multiple offers every year. And we had the money, we were able to build a sustainable business which was generating cash, and we would invest that back into the business and grow the business every year. Now, when you was basically about to dilute, if you have a larger business, the chunk that will get diluted would be much lower. So dilute at the right time. We diluted our equity when we wanted to scale up and not to survive. So the terms of negotiation are also in your favor if you are basically not pressed on my company will die if I don't get funds, and that's when you get squeezed out. So my advice to founders is that don't get into a situation where you will get squeezed out.
Okay, so I am going to get the VC perspective on what just Amit said after a quick break. At this point in time, we are going to take a short break. And on the other side, we'll continue the conversation. We'll also talk about essential areas of investment for a startup and exiting a business in case it fails. Stay with us on MSME Dialogues, only on ET Now. Welcome back to Leaders of Tomorrow, MSME Dialogues. On the show tonight, we are talking about starting up a business, and I'm joined by two very successful entrepreneurs and two men who fund the dreams of aspiring entrepreneurs. So coming back to you, the venture capitalists, Shailesh, we were talking a little bit about getting funding from a venture capitalist before the break. Tell me, how do you evaluate a proposal? What are those key parameters that are required to win you over?
So generally we do not fund ideas and we do not fund businesses. What we fund is basically businesses which have a lot of ideas. That means that they can become a large company. So every business is a problem. So a team is trying to solve the problem. So first thing, the problem should be large enough, and the team which is solving it should be the best team to solve it. If either of these two things don't match, we don't fund.
Sunil, a lot of entrepreneurs are reluctant to approach VC funds because they don't clearly understand how the sharing of the pie really happens, and they believe that they will then be chasing numbers rather than really running the business on a daily basis. What do you have to say to them?
Yeah, the entrepreneur has to be always working towards creating value for the customers and nothing else. Chasing valuations, etc., is what we just don't like at all in the complete system of this thing. But on your question of sharing of pie with the VCs, let me just give you an overall perspective on it. There are 5 or 6 elements where the money goes in, which is invested in a venture. The first one to gain is the government. Right. The day the business is created, it is the service tax, the registrar, this thing, other fees, etc., start going to the government. The second guys are the employees who make money. Then comes the investors. All the investors, the real investors, are making the money in the venture. Thereafter comes the entrepreneur, and then comes the fund managers like us as VCs and the entire chain of making money. If entrepreneur makes money, then only you can say the VC will make money. But overall, if I look at it, the point that Amit made, take a external funding only when you're in an inflection point, when you know that you can scale up the business. Right. Don't take it for sustaining the business. External money, when it comes for the inflection point, it will do wonders for each one of us.
Amrish, from someone who's running a heavily funded business, one of the most heavily funded businesses in Asia, as you told me, does VC funding deviate your concentration from the core business to really, the pressures of matching numbers month after month?
You have to make sure that when you're looking at that investment, it goes into your business when it is at the inflection point. There are some businesses which have many such inflection points, many such opportunities where literally the business can go like a rocket ship. If you're looking at a very large opportunity in the market, right? You have invested heavily in understanding the customer problems and creating a product which solves that problem. You do not want to compromise anywhere in terms of product development, and you don't want to compromise once your product has been developed in terms of taking the product out to the market. Right? Once you have proved that this product is needed by a market and the market is very, very large, you want to go all out and you want to go and win that market, and that's where you'll need capital. And if you get capital and you basically create a much bigger pie, you should not be worried about giving a slice to the investors. Of course, they're giving you money.
Okay, so Amit, perhaps one of the things that startups need more than even finance is mentorship. And you're, of course, one of the lucky ones who gets to be mentored by Ratan Tata himself. So how has that sort of mentorship really added to your business acumen?
I think it's been a great run with Ratan Tata sir as a mentor. Our international business that we started was practically on his advice on how he basically saw international markets as much bigger opportunities as well. Got him as a mentor very late in our in a curve if you practically think about it. We got him like last year only. While if you think about a new startup guy who's starting his business, he should probably focus on building his product, solving the consumer problems instead of chasing advisors, because that's not going to be valuable unless there's a network of business people that he needs that can be unlocked through that mentor. People just think there is glory in having some good names on the board. And I personally believe that it is very important for a startup founder to first focus on product, and if take an advisor only if he can unlock a lot more value. Like when we picked up Ratan Tata sir, we knew that a lot of value will be unlocked, and that we could clearly see that the vision coming through. And that's where I think we have been lucky enough to get such a great mentor like him.
While we are talking of a lot of success, we are talking of ideas, we are talking of funding, scaling up, getting the right mentor, there are still a lot of failures that happen in the ecosystem. Shailesh, how difficult is it to exit a failing business today, and what is the VC community view on the ease of doing business, or rather not doing business in India?
I think it's still very, very tough. As a fund, we generally end up writing up close to 40% of companies. I think I've closed a lot of companies so far in the last 15 odd years. And it is still very, very kind of impossible to close a company. So in India, it's very easy to start a company. It takes 20 days or 1 month. But if you want to close a company, it might take you 2 or 3 or 4 years. That's very frustrating. And I think there's a lot of ease of business happening.
Right.
But especially on the closer, I think that with the passage of this securitization bill, which is coming which is due in the next session, probably it will be better.
Amrish, as someone who's had some business failures before becoming successful, is it as difficult today to shut down a business as it was 10 years back?
I mean, I have experienced 10 years back. So far so good, right? I think company is doing well. So we went through the whole regulatory aspects of kind of closing a business,
Right.
and that was frustrating. But when I think about the frustration of the business not taking off, that was far larger in my eyes.
Okay, what's your view on this, Sunil?
Oh, one, we have to go through and manage the failures all the time. If we can manage an exit for that particular company because they own some kind of technology or some kind of talent, it's going to be great. So our customer or business partner or somebody can take it away, maybe at half the price that we've invested in, or whatever price that we can ensure continuity of that particular dream going on. It's going to be fabulous. But have we closed businesses? Until now, out of my 23 investments, luckily, till date, I have not had a chance to close any one of them. We've been able to exit a dying kind of business as well. Is somebody who's going to be closing down? Yes. If it is yes, then the problem is immense. I can't tell you, we are waiting for the Bankruptcy Act to come by, where in that 9 months period of closure happens.
Right.
Okay. Yeah.
Okay. So, yes, definitely a lot of expectations from the current government on the policy front. But before we close this discussion, Amit, one key mantra for those who are starting up, your personal advice that you wish you had when you were starting out?
Don't try to build that most perfect product. That does not exist, my friends. Try to build faster, try to have faster iterations, fail faster, get the market feedback faster, and move faster, learn faster from your failures. That's the biggest thing you can do as a startup founder. The two things that are in scarcity with a startup founder is time and money. So optimize both of them very well.
Okay. Amrish, your advice that you wish you had when you started out?
I think the advice that I would have wanted somebody to give me was be assured that there's a very high chance that this business is going to fail, right? I mean, this, like, statistically speaking, it's going to fail. And be comfortable about it. And the way you can be comfortable about it, if you really like what you're doing day to day. And if you really like what you're doing day to day, year down the line or 2 years down the line, even if it doesn't matter whether it's successful or failed, you would not have regret. You know, you would have enjoyed the experience.
Okay. Shailesh and Sunil, your mantras for people who have ideas but not really the courage to take the plunge of entrepreneurship. Shailesh?
I will just say, just do it. And second thing, do not start a business for the sake of funding. A lot of people have an idea because they think there's a lot of funding is happening.
Yes.
In fact, funding is the first start of failure.
Yes. In fact, today a lot of people start a business with the idea that I will exit within 2 years.
Yeah,
I'll
they
get a
chicken
great
out.
valuation.
So anybody who start a company with the idea of getting out even next 10 years will shut down the company in 3 years. That I can write on a stamp paper.
Okay.
Very difficult, yeah.
Sunil?
Starting a business. When does one start? There is one parameter only one should keep in mind. That is the day you're able to spot much more talented people than you to join you and be a founder or a team member of yours in the initial days. And what you need in a team? You need 3 things in a team. First, there has to be a visionary who can visualize what exactly will work and strategize around it. Second person who can convert that vision into a product. So if you can bring somebody in a technology company, we normally call him a CTO or a product officer kind of stuff.
Right.
And third guy who can execute a plan of go-to-market, who can go and sell, the business development person. If you can get these 3 profiles into the business, you are there and ready to start. Before that, even if you have a big order in hand, please don't start. Okay, you need people first before you get into the startup venture. Second, you always have a founder or co-founder. Please have a well-drafted agreement between the 2 founders as to, because statistically businesses can fail. If the business fails, how will you manage it? If the funding does not come by, who will put in how much money, at what rate of interest? All kind of scenarios have to be planned in a shareholder agreement. If they can do that, they will have a wonderful, healthy life running a business.
Okay, so those are some wonderful insights from building the perfect team to really believing in the idea and running that business day on day. We hope you enjoyed those insights. Thank you very much, gentlemen, for being on Leaders of Tomorrow. That's a wrap for tonight. Hope you enjoyed the show. Through the week, Leaders of Tomorrow will celebrate your success stories, bring you insights from industry leaders, and solve your business queries. We'd love to hear from you, so do write into us at leadersoftomorrow@timesgroup.com or reach us using social media by just putting in the hashtag LOT or just call us on the number flashing on your screen. Thanks for joining us. Goodbye and good night.